Hey, I'm Alex. Welcome to Future X Present, where we take a logical approach to today's market by blending real-time price action with historical data and technical setups. My goal is simple, to help you better understand how today's moves shape tomorrow's opportunities. Whether you're here for actionable setups or deeper insights into how the market moves, this is where we build confidence in each trade. Let's get it. Alright, the big headline today was the US CPI data for September, which came in slightly above expectations. Monthly headline inflation rose by 0.2%, holding steady from August, and core CPI, excluding food and energy, came in at 0.3% for the month. While this might suggest that the inflationary pressures are still sticking around, especially in areas like food and services, it doesn't seem like it's changing the market's expectations for the Fed's next move. Now, despite the uptick in inflation, most traders are still anticipating a rate cut at November Fed meeting, driven by the softening labor market and a longer-term disinflation trends. The initial market reaction was pretty muted. We saw a slight dip in equities, but they managed to recover, and bonds also rallied as well. Now, if you're like me and you're watching the data closely, you might have expected a bigger move here, but the market didn't give us any fireworks, at least not yet. Now let's talk about what I saw on the ES futures. We've finally broken out of the range we've been stuck in for nearly 3 weeks. Today's daily close above the range puts bulls in a strong position to push higher. My upper target for another leg up is around 5860 and 5864 area based on today's Fibonacci extensions. That being said, tomorrow's Friday, and I'm not a fan of holding positions over the weekend unless I'm super confident. So I'll be locking in short-term profits and managing risk accordingly. Now let's go over the bear case. If we open below 20355 on NQ or break below it during the day, or if ES opens below 5815, that could signal a move lower. My key lower levels are 5806, which would fill the 1 hour imbalance created from the breakout, and then the next level is 5793, a major pivot with trendline support. Now, based on implied volatility, I don't expect a massive move tomorrow, but you never know. Most of the action could happen overnight or during the opening session. So I want to give you guys an update on the key stocks that we were watching in the beginning of the week. Tesla held the key at 233.85 level today, which saved the inverse head and shoulders neckline. For the bulls, I want to see Tesla break above the current trend line. If we get that, the bullish thesis is still intact. AMD, we saw some sell the news type price action here. I want to see some AMD close above 165 to keep the bullish case alive. It's sitting at a significant level, and I'm curious whether seasonality will come into play, or if it'll just follow the broader market, or if it'll just move by itself. NVIDIA continues to show relative strength and is arguably leading the market higher. My short-term targets for NVIDIA are in the imbalance zone near its all-time highs, around 136.71 to 138.61. Now, Apple kept me holding onto my longs today. I didn't trust the market internals too much today, as they were all flat or bearish. But when Apple stayed above its trend line, that was the clue I needed to keep my long contracts open. Sometimes it's about trusting the price action and not getting too caught up in conflicting signals. Now, speaking of internals, they didn't provide much help today. The Mag 8 stocks, especially Apple, Amazon, and NVIDIA, were running the show. The rest were either saved from their lows or stayed flat without breaking any key ranges. Trin was around 1, signaling a balanced market, while Vold held steadily for most of the day, with a small ramp up towards the end. And then there's VIX. It's still elevated above 20.73, and there's a juicy gap still below it. With CPI data out now, and a critical Friday coming up, it's clear that the market is on edge, and VIX confirms that. If you're holding longs, it's wise to manage risk carefully. Get out of targets and let runners do their thing. Anything else, you're playing with fire. Alright, that wraps up today's market breakdown. We covered everything from the CPI report to key technical setups on ES, NQ, and some major names like Tesla, AMD, and NVIDIA. So what's your take? Are you bullish or bearish after today's analysis? Let me know in the comments below. I love hearing your thoughts, and it really helps me keep this conversation going. Alright guys, I'll see you in the next one.